Everyone, thanks for joining us today. The session is about corporate venture capital investment, and I'm here with Alexander Grove from Elevator Ventures. Hi,
Hello,
Alex. Do you
everybody.
want to introduce yourself?
Hi, Diana. Hello, everybody on the stream. It's great to be here again. Yes, my name is Alexander. I'm an investment manager at Elevator Ventures. We are basically a Fintech CVC based in Vienna. In my previous career, I worked in leveraged finance and gained my first startups experience with selling socks. So a bit of textile industry background as well.
And for anyone that is new to the corporate venture world, Alex, Elevator Ventures is the corporate venture capital fund of Raiffeisen Bank International, right?
Correct, yes.
Great. So we had our small conversation the other week, and we talked about sort of how everything started. Do you want to tell us how Elevator Ventures started at Raiffeisen, and what's an ideal startup profile for you?
Mm-hmm. Yeah. I mean, basically, how everything started was 3 or 4 years ago when Raiffeisen started with innovation strategy, and part of that innovation strategy was always kind of venturing activities. But the actual event, when we realized, okay, we need to set up a corporate venture capital entity, was really in 2017 after the first batch of Elevator Lab. That's our fintech partnership program, because we had a lot of really good applications, and we also thought, okay, there are really interesting financial cases on the one hand, also from an investor perspective, but on the other hand, we really wanted to push this kind of, let's say, POC and vendor relationship a step further. And yeah, that was basically the birth of Elevator Ventures.
So if that's correct, that was about 3-4 years ago when it started. And at that time, or I guess in time, have you sort of come to a point to identify what an ideal sort of startup profile is for Elevator Ventures? I'm only asking because, as you can imagine, a lot of the people listening today are startups. Some of them have raised funds, some are actually looking to transition maybe from VCs to CVCs, and we're going to cover that difference in a second. Or perhaps they've never fundraised before and they want to be prepared.
Absolutely, yes. I mean, our focus is clearly on fintech and basically everything within the fintech definition. So starting from RegTech topics, from beyond banking use cases, banking, so everything within that framework. In terms of stage, we are basically focusing on late seed Series A companies. Because that's the stage where we think it really makes also from a strategic perspective and from a RBI perspective sense to invest. And in terms of ticket sizes, so we start around 1 million euros plus, so upwards from that. And focus indeed is Eastern Europe, so that's our home turf.
Right. And is it correct to also assume sometimes you co-invest or you might invest alongside other funds or VCs?
Correct. Yeah. So we have on the one hand, we have a partnership fund called Fintech Growth Fund Europe with Unica Ventures and Speed Invest. You're more covering the western part. And we are also co-invest with our direct investments. Yeah.
Right.
That's what we do.
It's the reason I mentioned it. I think as a trend, CVCs, and you definitely know this best. It's been an upcoming and uprising trend, and a lot of the European VCs that has been taking place recently was in participation with CVC. So it actually reached about 20 billion euros last year in value. And interestingly enough, I was in a conversation with Hopin, the VP of Finance of Hopin yesterday. Everyone talks about the company because it's been receiving a lot of explosive growth since the last few rounds, and one of them that finished last year was running participation with Salesforce Ventures, which is another CVC. So corporates are definitely providing, compared to VCs or alongside VCs, are definitely providing more than just capital, right, to startups. They are helping them scale faster, access to resources, or even strategic clients. But sometimes I think CVCs haven't got to a point to be so much in prominence, I guess, to startups. A lot of startups are looking at VCs or perhaps angels. So how can founders get connected with CVCs and with you in the first place? And for startup founders listening right now, how they can prepare themselves for pitching in front of a corporate investor? Is there any difference from pitching in front of a VC, for example?
No, for relevant ventures, not, because we are, in terms of the financial case and investing, we are like any other investor, follow the market rules, basically. We are also financially steered. There is no big difference. Also in terms of number crunching, we're like any other. But when it comes to, let's say, portfolio development, we learned, and then we made a really good experience in terms of business development. We call it kind of strategic value add, but both for the fintech, but also for our core organization. And that's something which we're really actively developing post-closing. So here we are also looking, for example, for a co-product development. We are using our distribution channels. We are using our internal experts to basically work with other units of Raiffeisen Bank International. I think that's one substantial topic when we have discussions with startups, not only that the money matter, but also the strategic goal for both.
Absolutely. I was just about actually I had a follow-up question in mind about how these investments are actually linked to the strategic priorities of your company and how you're looking at these investments from most success point of view as well. It's there's a lot of data that actually shows corporations continue to invest in startups that align with their research and development strategy, for example, or goals, and to complement those operations. But at the same time, I think a lot of the external VCs actually are struggling. If you think about returns, right? About 75% of the VCs right now these days that don't even return the fund, unfortunately. So setting up a fund inside corporations, it's actually not an easy task. You guys have done it, but there must be, I guess, some strategic intent behind it, right? So, how are these investments into your strategy?
Mm-hmm. I mean, you're perfectly right when it comes to financial performance, and that's definitely a key topic also with us. So there is no difference. But how we want to achieve this kind of strategic value add is really to manage to have a more proper relationship between the core organization, the CVC entity, and the fintech. And how we do it specifically, so on the one hand, I mean, we fully utilize RBI's infrastructure. So we have experts in our house. We have 2,000 outlets where we can test basically new solutions. And how it's done, on the one hand, we have Elevator Lab, as I said already. Here are project managers. They're strongly supporting us, and they have the possibilities to really link the fintech then with the core organization, with the business units. On the other hand, we also have, we are a frequent exchange with the core organization. We also have experts in residence, so that this kind of link between corporate venture capital entity and core organization is really natively and is something which is in a kind of continuous exchange. And that's how we ensure that these kind of post-closing activities are executed in the end. Yeah.
Right. And obviously, we are going through some unprecedented times when it comes to what has been happening in the last year with the pandemic. But despite this sort of unstable economic climate, there's still a lot of appetite for investment. We've seen that in the rise of CVCs, but also in the private equity market as well in the last couple of years. But one thing that has been quite interesting about corporate venture capital is that despite the rise in number of deals, there haven't been that many exits yet, or at least not in Europe. And I think it's a trend we're probably gonna get to kind of further experience in the next year or so. I'm curious, just kind of thinking about a future outlook or where the market is gonna go. Do you think more corporations are gonna try to exit, corporations that have established a CVC fund?
Mm-hmm. Yeah. I mean, from a historical, before we started Elevator Ventures, we did a bit of historical research as well, and we saw there were different waves and different motivations of corporates to get engaged, which was with early stage companies and then growth companies. I think in the meanwhile, also corporates have realized that there needs to be a clear focus and a kind of clear goal behind the venturing activities, because if you don't have it, it's difficult to maintain a successful investment track record. But for me, I think more and more CVC investors follow really kind of VC routes in terms of their investment behavior, and other funds which are more, or other CVC entities which are more, have a strategic focus. They also have financial and return goals somehow in there. So yes, there will be also more exits in the future from venture capital.
Right. I mean, after all, it does provide a liquidation solution that it's a relatively untapped area of the market, and I think it's definitely something that a lot of corporations might actually need in the upcoming years. In terms of Elevator Ventures, what's next? What do you have in the pipeline for the upcoming year? I know you're focusing very much on fintech, as you said. Any other adjacent markets that you might be interested in, or have you seen any other emerging trends recently?
Yeah, I mean, for us, we are CEE is our heritage region, and so we stick to CEE. We have our infrastructure there. We know the local ecosystems there. For 2021, we have a strong focus on, let's say, asset tokenization. That's really interesting for us. We are also looking for, let's say, payment niche providers. I think here we still have the one rather category winner. Furthermore, we really like embedded finance, so where we have industries which are not directly related to banking, but where we can integrate in a native way also banking solutions. Yeah, and in terms of next big thing and developments, I think we are really proud that Raiffeisen Bank International signed the Charter of the UN for Sustainable Banking. And ESG, sustainable finance, and everything related to that is also a topic for us. I know it's a trend, and then it's emerging also in Eastern Europe, and we are at the moment elaborating different options, and that's for sure something that will come up in 2021 or 2022 as well for us.
Yeah, I think it's interesting you're actually talking about sustainability. I was having a different conversation with an investor which was active in the impact space, as we call it. I'm just curious, this is a bit off topic of CVCs, but it feels almost that startups are now required to show in their business model how they're going to make it sustainable beyond just obviously the finance or the economical part of the business model, but how is it going to be related to the societal or the overall impact? Is that something that also at Elevator Ventures you're looking at when you're assessing the startups, their possibility of making an impact beyond just economical returns?
To be honest, we're at the beginning of our journey. Yes, there was always a kind of thinking what could be ESG criteria. At the moment, we do not apply it, but we will definitely we are elaborating and we'll have an eye on it in the future, because I think that's not. I mean, making money and fostering growth and developing things together, it's great. But on the other hand, you also need to have a certain, let's say, you have a social responsibility as well. And I think these things are getting more and more important.
Yes, absolutely. Especially when it comes to financial inclusion as well. You mentioned UN. It's a huge part. I know in Eastern Europe and Central Eastern Europe, compared to other markets, for example, perhaps more less even before emerging markets like Africa, which they have a huge focus right now on financial inclusion. I remember in Cairo there were a couple of programs as well supported by the World Bank a couple of years ago. Even here, when people are quite digital, and I think even Poland is probably not just yet a cashless society, but I think it's we're heading that way. There's still scope for a lot of financial inclusion. So you're perfectly right. We are approaching sort of the end of our chat, unfortunately, but I want to just give just give you another chance in case you want to share anything with founders that might be interested in having a conversation with you or with Elevator Ventures. What would be the usual way of applying or getting closer to you?
I mean, we are using, as any other investor, we are using the typical channels like LinkedIn. Please text me directly, or we also have a couple of one-on-one sessions now via the matching platform. I'm always approachable. Also check out our homepage, elevatorventures.com. Please just drop us a note. We're happy to write you guys back, and also, as I said, directly via LinkedIn.
Perfect. And I think you mentioned already the networking part, Alex. A lot of the founders have already subscribed and signed up to Wolf Summit matchmaking platform. I think you're there as well. For anyone that missed that opportunity, that's still going to be available tomorrow as well. So tomorrow we have a dedicated day just for networking, and perhaps we're going to see Alex there as well, sharing more information on Elevator Ventures. Awesome. Thank you so much for your time today, Alex. It was really lovely to chat with you again and sharing some more information on CVCs and what Elevator Ventures is focusing on these days.
Thank you very much, Diana.
Thank you.